All right, good evening, everybody. Hope you're well. Apologize for being late. Sorry about that. And apologize for yesterday, too. I came down with like this crazy freak kind of sickness. I don't know what it was. I feel good now, but I was just out of commission yesterday. I don't know what happened. Anyway, thank God that is over and done with. Busy week on Wall Street. We had a pretty busy last 2 days. Obviously on Thursday, we got the CPI report out. We're going to be talking a lot about the CPI numbers today on the stream. Obviously, CPI came in at 6.5% on a year-over-year basis. Month-over-month basis, we actually declined a little bit in the CPI, but I think as we dig a little bit deeper into the actual report, I do have some concerns. And I think if you've been watching Walks on Wall Street, you probably already know what those concerns are, but we'll save that for a little bit later in the stream. Today, Friday, was the major kickoff in bank earnings. So Q4 financial earnings started today. We had JP Morgan Chase on the earnings block. We also had Bank of America and Wells Fargo. Now, Tuesday is going to be pretty busy as well. We're going to get into more of the pure play investment banks. I think Goldman Sachs is up on Tuesday, as well as Morgan Stanley. Pretty big movements in the market too. I think the biggest movement, I would say the most notable one, is in the Dixie or the dollar. Did everybody notice we had a pretty harsh, pretty big move in the dollar? Now down to about 102. Equities continue to rally. Gold is another bright spot in the market. If we look at gold, breaking 1900, okay? Trading at 1920 per ounce on gold. We're also going to be talking about a very important technical indicator on gold for all of those gold bugs out there. What else I got for you guys? The digital gold, okay? For all of those who are interested in the digital asset, Bitcoin, talk about an amazing price action yesterday and today. As of doing this video, Bitcoin's trading at $20,900, breaking above the 50-day moving average and also breaking above that 200-day moving average. Now, I went back on my trading view chart here, and I wanted to see the last time that Bitcoin broke above its 200-day moving average, and it last broke above it August 2021. So if you want to just be a regular trend trader, right? We always talk about Stanley Druckenmiller, Paul Tudor Jones. Honestly, if you throw a 200-day moving average on a chart and you forget everything else and you just buy when the asset or the stock or the commodity or whatever breaks above the 200 and you sell it when it breaks below, you may get shaken out of a couple positions, but you're going to catch a pretty nice meat of a move, and you should be doing rather well. So look, I don't know if the bottom is in for Bitcoin, but it is good price action to see that 200-day being broken to the upside and that 50-day moving average being broken to the upside. And I think that's mainly fueled in this drop in the dollar, right? You're seeing gold ramping, you're seeing Bitcoin ramping, you're seeing dollar lower. The only other thing we have to check, let's check on that 10-year U.S. Treasury yield. That is the bond price, excuse me. All right, 10-year U.S. Treasury yield trading at 3.5%. Not bad. I think so long as the bond market is stable, we don't have a crazy sell-off in the debt market, yield spiking, I think we should be okay. Everybody, let me close up my laptop here. Give me 2 seconds, and we will be on our way. Let's see who we have in the chat. I see Sabrina Fair, good to see you. Chris Beeman, Lizzie, Vinny Castellano, Gregory, Preston 984, good to see you. Bagels and Walks, John T, welcome John. Mac Lover, The Garlic, Joseph Hardaway, British Gray, and everybody else. All right, we're on 57th Street Billionaires Row. Let's head down to street level. For those of you who are just joining us, I don't know what the hell happened yesterday. Hold on, let me get out of the office here. All right. Yeah, I don't know what happened, man. It was crazy. I came down with this really crazy sickness, like right as I ended the live stream. We gotta go to lobby. Yeah, right as I ended the live stream, I was totally out of commission, But good thing it only lasted for a day. I definitely feel good now. Just to take some NyQuil and drank a bunch of water and tea, and I'm feeling good. But I don't know what the heck that was. Whatever it was, hopefully it doesn't return. All right, I'll see you guys on the ground floor. Hey, Sparks Carnival, what's up? Preston. Adrian Pommel says, glad you're feeling better. Thank you so much, I appreciate that. All right, team, here we are outside West 57th Street and 6th and a Half Avenue. It is a cold, brisk, and windy night here in Midtown Manhattan. We are starting off the live stream right from Billionaires Row, overlooking the beautiful Central Park Tower. Now, did you guys notice this? Did you notice something? Take a look at Central Park Tower. You see that all the way at the top? It looks like somebody or someone, something, maybe there's a big event going on at the top triplex of Central Park Tower. Now, we know that the top 3 floors of Central Park Tower are on the market for $250 million. So maybe there's some big showcase event. Don't they have like these open houses, like these big swanky parties and things like that? Maybe something cool is going on up there. Anyway, hey, Richard Vogel, good to see you. Malcolm, Dan Zhang, good to see you. Susanna Q4 says, love the view, clear night in New York City. Yeah, I mean, yesterday it was raining like crazy too. It was raining like crazy yesterday, so maybe it was a good thing that I got sick yesterday and not today. So, Sunshine After Rain is here, Fixed Image, welcome. Wendy England, good to see you. Dan Zhang says, hey Tom, have you seen the rally of gold futures yesterday and today? Hold on one moment. Yes, Dan. It's actually really promising price action here on Wall Street. Now, does anybody notice the correlations here? And we were talking about this, what was it, Wednesday? Yeah, because we didn't stream yesterday. We were talking about this on Wednesday. I guess the correlation between the Dixie and gold. So if you're on TradingView or whatever, trading software or charting software, I should say, that you use, notice the correlation between when the Dixie topped and when we started to have this equities rally and rally in precious metals, some commodities, as well as Bitcoin. Now, it's funny because, I was on Twitter today, and of course, Peter Schiff, and I happen to respect Peter Schiff a lot. I think he's a fantastic economist, extremely sharp guy, smart guy. I've learned a lot from him. I would highly recommend all the viewers Walks on Wall Street to check out the Peter Schiff Show, which is his podcast. But Peter Schiff was talking about, cheering this rip-roaring rally we have in gold. But it seems as if now the correlation between Bitcoin and gold is they're moving in lockstep with one another. Does anybody else find that to be a little bit ironic? Now, I guess you could say gold is now leading Bitcoin. But dollar down, dollar weaker seems to be fueling this rally in gold and digital gold. So the physical and the digital. Lena Sandoval, welcome. Sabrina Fair, good to see you. Now, what did everybody think of the CPI report that we had come out yesterday? Now, I think you guys already know what I'm going to say before I even say it, but we're going to go over it again as a team, as a chat here. But CPI came in at 6.5% year over year. So it was low. I would say this, on a month over month basis, it came in lower than expected. On a year-over-year basis, it came in line with economist expectations. This is Central Park Tower. Beautiful, beautiful building. But here's the interesting thing. And so I went to the website. So if you guys want to type !CPI in the chat, okay, once again, !CPI in the chat, I think it's really important for everybody to actually look at the physical report, right? Because the vast majority of people on Wall Street and on Main Street, they'll just look at, you know, a New York Times article about it, a New York Post article about it, CNBC article about it, and they don't really understand the mechanics of the CPI report. Does that make sense? Now, here's the reason why I want you to actually look at the physical report, because if you scroll down, you'll see a chart that is broken down by category. So it's categorized by, you know, food at home, shelter, used vehicles, and things like that. And you could actually see the broken down month over month and year over year price changes for each specific category. Here we are standing on Broadway. If you look all the way up Broadway, you can see the Trump International Hotel and Tower. You know, I think the first 12 floors of the hotel, and then everything else is the residences. It looks like they have some pretty good vacancy here, doesn't it? It looks like every single light is on. Maybe that's just because it's the weekend. The LT Prod says, I think we have more inflation to work its way through the system, and we are definitely not there yet. Yeah, potentially. Now, again, I'll sort of repeat this and not sound like a broken record, but the two categories that I think matter most to the average American is number one, shelter, and number two, food, right? Because if you just think about a traditional hierarchy of needs for basic functionality, right? Just like the bare bones basics for survival in this world, you need a place to stay, like a roof over your head. And number two, you gotta feed yourself, you gotta eat. Now, does anybody want to take a whopping guess at which two categories actually did not show improvement as it relates to inflation? Anybody want to take a wild guess? Hey, Jimmy Hook, what's up, man? Yeah, you're right, crude oil futures also long this week. Crude had a little bit of a bid, you're right. You're definitely right. Yeah, Ryan Beck, food and shelter, exactly. Now, hold on, I wrote this down. I have some notes here. I'm still suffering from a little bit of brain fog from my freak illness that I had yesterday. But if you type !CPI in the chat, click on the link that the Nightbot drops and scroll down to the shelter category. And this is exactly what you'll see. If anything, on a month-over-month basis, shelter costs actually accelerated. Not decelerated, accelerated. And that is, I think, the most critical expense for an average American. So shelter costs were up about 0.8% on a month-over-month basis. And on a year-over-year basis, shelter costs was up about 7.5%. So those are really terrible numbers. Those are horrible numbers for people trying to pay rent, for people trying to buy a home. And secondly, food. If you just look at the overall broader category, I know you have different subcategories of food, you know, like food that you eat away from home, as well as food that you eat at home. Oh, hold that thought. Look at this. This is a nice view of 220 Central Park South. Really nice view. And food was up 0.3% month over month. And 10.4% year over year. Now, did new vehicle prices decline? Yes. Did used vehicle prices decline? Yes. But the two main categories that I think are of most importance to the average American continues to accelerate, actually gets worse, not better. So I think that, we talked about, here's a saying that I like to say: the Federal Reserve is not stupid, right? So Fed Chairman Jerome Powell looks at all of the same data we do, right? So the point I'm trying to make is, if I'm the Fed president and I'm looking at this data, I'm thinking the same exact thing that I'm thinking right now. I'm like, okay, we got the CPI report. Yeah, the numbers are coming down in general, but the two most important categories are showing no signs of easing. If anything, they're accelerating. So I think if we look forward, and for all of those projecting or expecting a pivot in monetary policy, I wouldn't be so sure. Who knows? Sparks Carnival says I eat 2 eggs a day except Monday, which is always a fasting day, because eggs are crazy expensive now. We had a big conversation about eggs 2 streams ago. And yeah, the prices of eggs are ridiculous. And I think it's due to some crazy bird flu. Is that correct? I think a big majority of all chickens are infected with this crazy flu. Just what we need. Hey, Michael Joseph, what's up, dude? Good to see you. Thank you for joining us. This is What Am I Missing? Why the Big Rally on Wall Street? Yeah, so if you look at the S&P, the S&P 500 actually managed to close above its 200-day moving average as well. So very good price action there. Let me try to get the chat here. Hey, Yogi, what's up? Says, I can understand food prices going up with fertilizer costs going up. Why the housing? Well, I still think you have a shortage. Well, I think there's a couple reasons. Now, these are opinionated reasons I'd like to forewarn you. I always like looking at all the taxi cabs lined up here outside of the Deutsche Bank Tower. Well, from a landlord perspective, here's what I think may be happening, and this is just one of the many, many reasons. During the pandemic, a lot of these landlords got stiffed, right? Tenants weren't paying, and very, very few landlords actually were able to receive their rental assistance income for that. Now, what you also had during the pandemic is all of this massive Fed-induced liquidity into the market. Now, when we talk about the Fed-induced liquidity, printing a bunch of money, we mainly focus on the equity side of the house. Would that be fair to say? We mainly focus that on the equity side of the house. So if you think about market returns in the latter half of 2020 through 2021, there's pretty much a 99% correlation between the Fed balance sheet, talking about the expansion of the Fed balance sheet, and the prices of equities, right? You had equity indices, including, the NASDAQ, the S&P 500, and the Dow Jones Industrial Average, busting all-time record highs every day, right? But that also includes property valuations. And when property valuations go up, what also goes up? Yeah, property taxes, okay? So when the valuations of property goes up, you could best believe your property taxes are also going to get jammed right up there. I know that's the case for me. So if you're a landlord, you're not going to eat that cost out of the goodness of your heart. You're going to pass that on to your tenants, right? Quite obviously. Now, that is a one small, teeny reason why, right? You also have still, to this day, record low inventory. We haven't really seen this big inventory blow up that a lot of economists have been projecting, even though interest rates have been going up. Supply is still very, very low. I don't know, but what are your thoughts? What are your thoughts as to why that's happening? So this is the main Columbus Circle subway entrance, and you have a beautiful view of Billionaires Row here. It looks like almost everybody at 157 is home today. Looks like every single person is in their apartment. Hey, the Mighty Bull is here. Good to see you. Thank you for joining us. Dusty Cole is here. Says, hey Tom, how you doing? I'm doing good. Thank you for asking, Dusty. Thank you for being here, for joining Walks in Wall Street on this chilly, frigid, and windy night in New York City. Ryan Beck says, Tom, an interesting take was that there isn't enough risk on the market to hedge against it, thus a low VIX. Wow, that is actually an interesting take. That is a very interesting take. You know, another thing, Ryan Beck, I think we actually talked about this. I'll quickly show you guys the Deutsche Bank towers. Now, in the tower on the right, you have the Mandarin Oriental Hotel, and then the left is Deutsche Bank, as well as the residences. I believe the address is 1 Central Park. Could only imagine how gorgeous the views are from there. But, you know, I was on a call today with a hedge fund manager. Really quick, I want to show you guys inside the hotel rooms here. I've stayed at this hotel a couple times, and let me tell you, this, in my opinion, is the best hotel I've ever stayed at. It's insane. It's ridiculous. But anyway, let's sort of talk about maybe an additional point to Ryan Beck's point. Now, if you look at all of these different indicators, like the put to call ratio, the VIX, which I think declined today again. Oh, this is the restaurant. I always forget how to pronounce it. I think it's Jean George's. I'm horrible at pronouncing it. But this is actually the kitchen. It's kind of cool to be able to look in here, see them preparing the food. This is one of the most expensive restaurants in New York. Very good restaurant, too. Kind of cool to be able to see them preparing the food in there. Now, here was essentially the conversation and how it went. It's that if you look at the consumer sentiment, right? So University of Michigan Consumer Sentiment Index, we continue to hit all-time record lows in consumer sentiment. So the average consumer, the average retail trader is very negative. They have a very negative outlook on the economy. They have a very negative outlook on the stock market, but they don't reflect that in their actual actions, in their portfolio allocation, which is quite interesting, right? Because you're having all of this negative sentiment, but you're not having negative market positioning. We're not really seeing retail dump their equity portfolios and their individual stocks. If anything, we're actually seeing them take on more risk. It only about 2 weeks ago, right, when we had that big news from JP Morgan Chase saying that, not last week, but the week before, was the most selling activity, or the heaviest selling activity on Main Street for the retail trader ever. That only just started to happen. We're still seeing some fund flows into these crazy, very high beta, high risk ETFs, like the ARK Innovative ETF. So it's an interesting dichotomy we have, where consumer sentiment is at all-time lows. Everybody is feeling negative about the economy and the stock market, but their equity portfolio exposure says quite the contrary. It's really strange. I don't know if we've ever had a market environment quite like this ever. Hey, John says Macy's has been quietly closing stores for years now. Yeah, it's probably the Amazon effect for sure. Michael Joseph says the VIX just reset itself on January. Risk on. Mike C says, my friend just texted me, and I almost typed the response here. Hilarious. Susanna Q4 says, what is the name of the hotel? This is the Trump International Hotel and Tower. So I think the first 14 floors of this is the hotel, and then the rest is the residences. You could sort of see from the street level here. Let me give you guys a view. Now, I don't think we can ignore the price action, right? This week in general is a good week in the market, and we do now have the S&P 500 finally trading back above the 200-day moving average. And we're starting to see some specific industry groups, which we'll probably talk more about on Sunday's stream. I've been sort of compiling some specific industry groups within the market that are actually trying to build out, I would say, stage one bases, right? Which means that these stocks that have been getting hammered for about a month or two now, they're not going down, they're starting to build bases, and price action is going sideways, which is sort of what you want to see, right? And in that environment, you could still have earnings declines, right? I think we talked about this 2 days ago, maybe we didn't. But if you look at the data, the market, since it is a forward-looking mechanism, the market tends to look forward about 6 months. You can still have earnings declines, but you could have stocks rally. So usually, as the market is emerging from a bear market to a bull market, some of the earnings could come in negative. And you'll have a lot of people scratching their head on Wall Street and on Main Street saying, how is this possible? Stocks are gapping up and rallying when we had a crummy earnings report. So we'll keep an eye on it. Hey, Dr. Steve is here. What's up? Says the skeptic inside me says it's a huge bull trap for institutions to unload in huge blocks. Potentially, maybe. Now, speaking of the large institutions, okay, today, here's the front entrances of the hotel. So I'll sort of explain it. The stairs on the right is to the residences for the people who own condominiums in here or rent. The middle is the hotel, and the third stairwell is the restaurant. And you have amazing views of Billionaires Row from this hotel. Probably the best in the city. Maybe even better than 15 Central Park West, which is right to the front of us here. Maybe I'll walk a couple blocks up this way. But we heard from JP Morgan Chase today, and we heard from Bank of America, Wells Fargo, all that good stuff. So I think this is an appropriate time to sort of segue into bank earnings, but specifically I want to focus on consumer delinquencies, specifically even more credit card delinquencies and defaults. So was anybody on the earnings call today for Bank of America or JP Morgan Chase? Well, if you weren't, if you type !BAC in the chat, okay? So !BAC in the chat, that is going to give you the link to the investor deck. Okay, so the Q4 2022 Bank of America earnings presentation. And I think if you scroll down to slide 11, I think it's slide 11 and 12, they actually did a really, really good job of putting together a few charts and a few graphs to show us the historical default rates on credit cards, consumer loans, and business loans. And I think a lot of that data is going to be really, really interesting to process here, because a lot of people are making sort of blindish comparisons to the 2008 financial crisis to now. So if you look at a lot of that data, I think first maybe we'll just sort of read the headline numbers, because at the end of the day, for a recession, right? And I'm sort of using air quotes. The banks blew it out of the water. Is that fair to say? I mean, look at net income for JP Morgan Chase. Net income was, I think, $11 billion. They made $11 billion in the quarter. That's strong performance, everybody. And I think you guys already know what I'm going to say. So they made $11 billion in the quarter, and that is with investment banking revenue falling off a cliff, right? Obviously, everybody expected that. I think that's why you got the movement in the stock that we did today, because everybody was expecting the egregious investment banking fee declines, both at JP Morgan Chase and Bank of America, but not exclusive to those two major banks. Because, Wall Street is coming off of record years, right? 2021 was a windfall for profits as it relates to investment banking revenues. You think about, M&A activity was off the cliff. Deal flow was incredible. Look at the IPO market. It's down 99% this year in comparison to last year. So, deal flows down. So that means normally, generally speaking, banks are going to get a lot less money or revenue from investment banking fees. But the only thing that really saved these big mega banks, or I should say compensated for the lack of investment banking revenue, was the consumer side of the house. Obviously, as rates go up, the Federal Reserve has been raising interest rates. That technically means that banks are probably going to raise their rates on people like us for credit cards and other products. So they're going to rake in more money, which is good for them. And not to sort of go on too much of a tangent here, but that's another reason. All right, let's try to walk back into Midtown. But take a look at 157. Very, very seldom do we see any lights on in this building, but it almost looks like every single unit in the building is accounted for. I could only imagine the views from that office, that apartment. But anyway, the last thing I'd like to say about that is, you've noticed in JP Morgan Chase's earnings and Bank of America's earnings that the retail business sort of saved them from the decline in the investment banking revenue. So if you think about a pure play investment bank like Goldman Sachs, who doesn't really have any exposure to retail, right? And I know what you're thinking. Well, Tom, they technically do have exposure to retail through their... Oh, what is this? Oh, is this a Rivian? I think that's the first time we saw a Rivian on the live stream. Wow, that thing looks really interesting. Was that the first time we saw a Rivian on the live stream? I didn't even know they looked like that. Preston's his Tesla truck. Yeah, it kind of looks cool. You know what I like about it? You know what I like about that Rivian? Super quiet. Super quiet. That thing is so cool. Yeah, running at altitudes as Tesla just reduced their prices. You're right. But did everybody see Elon Musk actually jumped on Twitter Spaces and was sort of combating the reason why? Because everybody was all upset that they reduced prices for Tesla, right? Obviously, all the people who bought, they were all up in arms. But Elon Musk actually jumped on a Twitter Spaces to explain himself why he is reducing the prices. Troy Atman says, Tom, all the meme stocks are up big. What are your thoughts on that? Yeah, well, you have to, the way I sort of explain it in my view is this. These things have been getting pummeled, right? Have been deflating from their astronomical price rises. And when you have a particular stock that is $4, $5, right, and the thing rallies 50%, it's an immaterial move. And what happens is you have a lot of these securities rallying back to their moving averages. So we talked about this before. The market is just trying to recover from weeks and weeks and almost months of relentless selling, right? So you have these individual stocks that are so far extended to the downside from their major moving averages that, yeah, they can have a relief rally, but it always catches a headline, especially on these garbage meme stocks, to say, oh, they rallied 50%, right? They're probably just going to rally back to their moving averages, and then you could probably load short again, and they'll decline. That's my view. Anyway, not saying I'm right, not saying I'm wrong, but that's sort of my view. I don't even think it's worth looking at them, to be honest. All right, team, we're coming up on 7th Avenue here. And this is the very famous New York Athletic Club. Check this out. It looks like there actually may be an event going on up here. I'm not sure if you guys can see that, but there's some people on the balcony. Susanna Q4 says, Tom, a relative told me to fix a small bumper dent on a Tesla cost $8,000. Jeez, because they had to replace all the sensors in the bumper. Ah, okay. Man, that's a lot of money. That's crazy. Will M says all these electric vehicles are heavy compared to their counterparts. Is that true? I didn't even know that. I didn't know that. This is one of the main entrances to Central Park. You could actually see all the horses over here. Hey, Frank the Tank, good to see you. Nina is here. Welcome, Nina. Thanks for joining us. Abdullah. John. Yeah, let's take a walk down Central Park South. Bagels and Walks is here. What's up? Thanks for joining us. So in a headline number, JP Morgan Chase actually beat on both the top and the bottom line. EPS came in at $3.57. Wall Street was expecting $3.07, so they beat on the bottom line. They also beat on the top line too. They reported $35.57 billion worth of revenue. Wall Street analysts were expecting 34.3. Now, gross investment banking revenue came in at $700 million. That was down about 52%. So investment banking revenue cut in half. If you've been watching Walks on Wall Street, we've been talking about this almost to the point of ad nauseum. Because, again, you got to think about the market conditions you're in, the market environment that you're in. And when the Federal Reserve is providing ample liquidity and artificially suppressing rates, well, you naturally have a ridiculous amount of deal flow. So think about all of the M&A activity that happened in 2021. Investment banks made windfall profits on the investment banking revenue. And now that essentially the M&A market, I wouldn't say is dead, but is significantly reduced, deal flow is significantly reduced, you're naturally going to have a decline in investment banking revenue. Now, as we talked about before, here's the front section of the New York Athletic Club, the main entrance, I should say. I've never been in here. I'd love to go. Hey, Theo is here. What's up? Good to see you. Somewhat knowledgeable geek. Welcome. Theo says, I had a great pleasure of speaking at the New York Athletic Club. Wow, at a Columbia Negotiating Summit. It was a great space. Theo, you're gonna have to get me in there. I've never been. I wanna check it out. Just kidding. But no, if you can, I would. That'd be awesome. I'm sure it was an amazing experience. Did you ever get to go outside on the? They have a really nice open space outside that overlooks Central Park. It's really gorgeous. Really, really gorgeous. Speaking of something that's gorgeous, this is the JW Marriott Essex House. Now, it's funny. If we want to tie this back into investment conversation, look at a lot of the hotel stocks. If you talk about relative strength, stocks trading near 52-week highs, take a look at Hilton, ticker symbol H. Hilton almost blew past an all-time record high today. And, well, I won't tell you guys, I won't give it away, but look at Wall Street's 2023 earnings estimates for Hilton. And I think you'll get your answer as to why the stock is trading near 52-week highs. Hey, Tom G, what's up, man? Good to see you, Tom. Hope you're well. Sparks Carnival. So CNBC had an article today on why Chipotle will continue to do well even in the recession. What'd they say about it? All right, this is the inside of the JW Marriott Essex House. This is one of my favorite hotel lobbies in the entire city. It is absolutely gorgeous in here. You have amazing crown moldings. You have almost like this granite and marble casings on the big pillars here. It's really beautiful. Hey, Abdullah, good to see you. Here's the piano I was telling you guys about. I think on the weekends, Saturday and Sunday, they have live music in here. Joe Driver says, Tom, you sound with cold/nasal. Short walk tonight to recoup. Suggestion. Yeah, so it was crazy. I think for the people who are just joining, yesterday, it was like the craziest. I've never had experienced something like that in my life. Well, 2 days ago, actually, now. So right as we ended the live stream, I just felt horrible. I don't know what it was. I just felt totally terrible. And it wasn't, I don't know how to explain it. It was just the weirdest sickness ever. I felt like disoriented. I felt like I was incapacitated. I couldn't like remember where anything was. I even had a hard time getting home. Like I couldn't remember anything. And I took some NyQuil and I went to sleep and I woke up and I felt better. But I'm like, you know what? I should take the day off yesterday. So I sort of just relaxed all day. And today I feel like 100%, but I just have this, I don't know, I guess I sound a little bit nasally, but you're right. You're 100% right. Hey, Wendy England, what's up? Abdullah, hopefully not. Hopefully not, man. Hey, Jedi says, hey, Tom, hello from cold Miami. Yeah, it's like 67 degrees where you guys are. Now, that's crazy because I'm flying back to Miami on Sunday. And I think it's going to be the last day of the cold front right when I get back. So hopefully it's 80 degrees again once I get back. Who knows? Joan K says, hope you feel better. Thank you so much. I appreciate it. Malcolm says, hey, Tom, what's the stiff about Biden being under investigation regarding documents? Will this impact the markets? I really don't know, to be quite honest. I try to tune a lot of that stuff out. Do I think it'll have an impact on markets? I don't. Something like that, I don't. I actually started to block those keywords. Wow, Brad says it's 42 degrees in Tallahassee. That's cold. Ed T says take some vitamin C. I crushed a ton of vitamin C. Let me see, I took 2 tablets of vitamin C 2 days ago and then again today. I don't know what it was, guys. I mean, to be honest, you know when you get sick and you know you're getting sick because you feel that thing in the back of your throat, you're like, oh man, I'm gonna get sick. I felt that for like 15 minutes. And then I just felt like delirious, like I couldn't remember anything. Like it was just the weirdest thing ever. And then I felt fine the day after. Felt fine. Here we have 106 Central Park South. This is actually my old building. And when I used to live here, we were actually put on lockdown 2 separate times because of this building right here. This is the Steinway building. And the Steinway building had the crane collapse 2 separate times and fall right onto this street right here. So we had to stay in the building. It was definitely a crazy time. Definitely a crazy time for sure. All right, let's make a left here on West 58th. Oh, I think the what's it called? The gimbal ran out of battery. Well, I think Joe Driver may be right. Maybe we'll call the stream a little bit early, an hour early. I'll get home and get some rest. But we'll be back tomorrow. Can't really stream without the gimbal. So if you guys enjoyed the live stream, feel free to leave a like on the video. Subscribe to the channel if you're new. Click the subscribe button. But before you go, look at the top 3 floors of Central Park Tower. It looks like somebody's holding some sort of event in there. I don't know. right, everybody. Thank you so much for joining. I appreciate it. Ed T, Ryan Beck, Abdullah, Sunshine After Rain, Nina, Mr. H, thank you so much. Troy Atman, Matt, Sabrina Fair, Anthony, Wendy England, thank you so much. Joe Driver, Wayne McKay. And to the mighty bull, have a good night wherever you are, because there is always a bull market somewhere. You just need to know where to look. Subscribe to the channel if you're new. Leave a like on the video. And everybody have a fantastic weekend. Thank you so much.